Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. October is National Financial Planning Month. Financial planning as we know it now includes investing, tax planning, retirement planning, and basically other ways to get your finances in order and create mindful budgets to ensure a safe and secure future. Getting a step ahead of your spendings and finances is beneficial in the long run, and Financial Planning Month is the perfect time to do that. Joining us for this segment, we have Seth Wunder, Chief Investment Officer at Acorns, to discuss why long-term investing is your friend. Seth, it's great to see you. Welcome back to Trade Talks.
Yeah, thanks for having me.
There is an old investing adage, volatility marks tops and bottoms. What does that mean?
Yeah, so what that's referencing is that when a stock market gets more volatile, it usually means that we're either in a topping or a reversing pattern, or on the bottom side as well. If you look at the history of, let's say, long-running bull markets, they tend to be much more volatile or lower price action or price volatility every single day. And the reason for that is that it's people, investors are being uncertain, right? So finding that incremental investor to buy during market tops and that volatility is saying that the market in general is getting nervous that something bad might be on the horizon. And the same thing is true if you look at market bottoms, whether that be back in 2009 or other pullbacks, even back in the early 2020 period as well. And so if you look at the market today, the market this summer and right now has been exceptionally volatile, particularly after we've already entered a bear market. We're wrestling with the Fed, we're wrestling with inflation. You could argue, amongst other reasons, that this could be a sign of a bottoming process. And it's just something to keep in mind for investors that just think about their investing plan over the long term.
Why should investors be patient with Fed policy and inflation curbing?
Yeah, so for a couple of reasons. The first one, most importantly, is that there is the adage that interest rates take 6 or 9 months to go from a Fed decision to showing up in the economy. And the second reason is that some of the stickiness around inflation factors are just starting, whether it be wage inflation and so forth. And so even though we've been dealing with the supply chain problems for a while, we have wage inflation being a big contributor to inflation at the moment. The other thing to just recall for people is that the Fed really just started raising rates in earnest not that long ago, and they've been doing it in rapid succession at very large increments. And so we will see those effects over time. And it's something the Fed just has to be careful about, of understanding or trying to read the tea leaves of how significant that will pull back or impede the economy's growth.
Since the 1950s, the S&P 500 has declined 10% or more 23 times. How did it recover?
Yeah, I love this question because there's a lot of different ways and reasons for why the S&P can pull back. So about half of those times the S&P's pulled back since 1950 have been in bear markets. And one thing to note about bear markets is from the time we actually start a bear market to 1 year later, they're up, flatter up the majority of the time, upwards of about 10%. 2 years later, they average even higher returns than that. And then if you look at from a corrections basis, so corrections defined as a 10% pullback, that's the other half of the time since 1950 that we've had those 10% pullbacks. And those usually, those do occur, I should say, in bull markets. And bull markets last on average about 6 years, and there are very frequent 10% pullbacks over the course of a bull market. And as we all know, bull market returns are dramatically higher than bear market pullbacks. And so those pullbacks are normal. Whether it be bull markets or bear markets, the end result historically has been higher highs.
All right, Seth, we appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.